VA county loan limits are changing in 2026, and we're going to touch on number one, what the loan limit changes are, and number two, why it really doesn't matter too often in a VA loan. First, what are those changes for 2026? The county loan limits are going up from $806,500 in most areas of the country up to $819,000. That's the anticipated amount that we're going to see. Should be officially announced in November. If you're watching this later, just know that we're looking around the $819,000 figure. Now, for high balance areas, this is like Alaska, Hawaii, and a lot of areas that are higher priced in the country. Los Angeles to San Francisco, some areas in DC, a couple spots in Florida, and getting in Colorado, some higher areas. We're going to see that higher priced area elevate up to $1.228 million, so $1,228,000 from the current existing $1,209,000. So overall, we're looking to see not as big of increases we've seen in the past, but still an increase to these VA county loan limits. The big one overall, moving from $806,500 to $819,000, and the higher balance areas still getting a good boost as well. Now, we're going to talk about why that doesn't always matter on a VA loan. Why does it not always matter? Because on VA loans, this changed back in 2020. There are no county loan limit implications unless you have an active standing VA loan. What does that exactly mean, Evan? Well, if you have no outstanding VA loans, meaning you have no outstanding VA loans that you're keeping, or you have one but you're selling it before you buy your next one, you can do 0% down on a VA loan up to as much as you want. We've helped folks on $1, $2, $3 million VA loans without any issues, still doing 0% down. But where the county loan limits really kick in on VA loans specifically is when you're going to keep an existing VA loan. What happens then is the basic math on it. It's not the perfect. If you're a loan officer watching, you're like, hey, there's some more math to it. There certainly is. But the basic levels of it is that you're going to take the county loan limit that you're moving to and subtract from it your previous VA loan, or the VA loans that you're keeping. You're going to subtract their original loan balances. And we get that from the certificates of eligibility. So let's say your certificate of eligibility shows that you have a VA loan on your file for $300,000. Now you're moving to a new location where the county loan limit now is going to be $819,000. The 0% down eligibility you effectively have would be $819,000, the county loan limit, minus that loan you're going to keep, $300,000. So you're going to have somewhere around $519,000 in 0% down eligibility. Get a little more math to it, a little more precise number for it. That's the basics of how that works with county loan limits, and that's why they're still important to understand. For those of you that have an outstanding VA loan, they matter. If you have no active VA loans, or you're going to sell your home before buying the next one, so you free up all your what's called VA eligibility and entitlement, then there's no worry about these county loan limits at all. My name's Evan Kaufman. I hope this helped explain. Take care.